Hey, good morning, everybody. Monday, the 27th of July, 2020. I hope you had a great weekend. Time to get looking at the markets open with me, Chris Johnson. Hopefully, somebody's going to give me a little double knock here. Let me know you can hear me and see me. And come on. I see that Nick is already on, taking care of things. JMS, we're starting to see aliases pop up here. Uh-oh. Going once, going twice. Now I'm getting the knock knocks. There we go. I was about to go. I don't know where our normal first student is that normally gets up there so quickly. He slept in a little bit today. Hope everybody had a great weekend. Hope everybody stayed safe. Lots of headlines to talk about. Lots of things going on with this market. Lots of interesting places that our people are from. I have to say, every morning, love kind of seeing all of the where everybody's from. Makes it's a little bit of fun for me. Anyhow, let's talk about the market. We got a lot of headlines. Obviously, number one thing that came across the headlines over the weekend was not China, which was good. Instead, it was inflation, and it was the fiscal package, the fiscal stimulus package, something that's going to be around $1 trillion, something that it looked like wasn't going to get done until August or after everybody went on recess. And I think the pressures now, the political pressures have come to subside that they're going to get this thing done quickly and get the money out. A lot of changes, actually, some subtle changes. Dayton, Ohio, there you go. Flyer fan, I'll bet. A lot of changes, subtle changes. You know, they initially were saying they were going to drop the unemployment, that $600 a week completely. That's supposed to end right now, but now they're saying that they're going to continue that at a smaller amount, and you're going to get a rehiring bonus if you go out there and find a job if you're among the unemployed. Another thing that they're floating out there, obviously they're putting more money into PPP. There's a lot of things, that the litigation protection, lots of things that are going to go into this plan. I think it's going to be a little different than the last round where it was just we're sending a bunch of money out to people. So things that you want to watch here. A lot of the consumer discretionary, and this is just kind of me looking at it before we see what is in the sausage. The sausage was getting ground up this weekend, apparently. Before we see that, a lot of things you want to think about. Last couple of times, first of all, with this cutback on the checks, a lot of consumer discretionary companies started to do a little bit better. We started to see people go out spending. That also helped the retail sector as well. That is not going to be the case this time because it looks like it's going to be smaller amounts of money. Also, the banks, larger deposits were coming straight into the banks, and they were getting money that was right there in the vault, if you will, or the electronic vault. One of these days, we need to talk about this coin shortage a little bit because it's really starting to bother me. When I talk about banks, I think about that. Anyhow, yeah, please don't mute me, or you can if you don't like what I say. I'd probably just rather listen to what I say than look at me. Anyhow, so a lot of things that are going to be different about this, and I think that's why you're seeing the market only trading up. The Dow is up 12 points right now on an implied open. We were up 120 earlier. Futures were all over the place. The other virus, or the other headline that was out there, and we're going to get to the charts in just a second, or I'm sorry, to the slides in just a second. I've got some good stuff for you today, but we were up more than 100 points last night. Lots of stuff coming out about COVID-19. They're seeing a resurgence in Europe. China has seen a spike in their numbers now. Spain is seeing a spike in their numbers. So a lot of people talking about how this is truly possibly the beginning of the second wave, not just the wave that we still have going on here. Something to watch out for very closely. And obviously some other headline news that balance that out. Moderna says they've got the third stage going, 30,000 people. They expect to have results in November or so, somewhere around there. Let's just get to the headlines, because what we're going to do today, we're going to talk about the headlines. We're also going to look at the charts we usually look at. We're going to do something different. We're going to trade the headlines today. So I've got some headlines that I've pulled out: upgrades, downgrades, et cetera, et cetera. Garmin, did you see they've got an outage and they're putting it on a ransomware? They're blaming it on a ransomware problem. There's a trade there for you. TSM up 7.8%. That is one of the stocks that is in the chart, which is why I'll mention it since it was brought up. Intel's giving them orders. They got an upgrade as well. Taiwan Semi is going to be the way to go here in terms of the chips. I think they're going to blow away NVIDIA here over the next 3 months. I'm worried a little bit about chip demand, and that's what Intel was telling us when they held back on the 7 nanometer development. They're worried about whether their CFO is now in charge a little more than he was a few months ago. And that's why you pull back on projects like that so you can have a burn rate that's not as high when you get demand that's going down. But I think Taiwan Semi is definitely the company that you want to watch, up huge on Friday and then starting up huge today. Let's go to the slides. Finally. All right. Futures slightly higher. And I typed that when futures were up 100 points on the Dow. We're up 27 right now as I watch it tick on the screen here. Headlines between China and the United States were quiet over the weekend. I guess we got enough from, just evicting people or giving out eviction notices last week was enough to at least get everybody rattled up a little bit here, and maybe cooler heads are going to start to prevail. I doubt it. I think that we're probably going to see more headlines from China, and it probably won't wash out over this week, because this week's headlines are all going to be about earnings, the Fed, and the GDP print we get at the end of the week. Write that down, folks. There'll be a test on that later. Earnings, we know that. Fed, we know that, and GDP. So futures are pushed out of negative territory. They were trading about we were down about it was 30, 25 points on the S&P 500, went up positive as some of the details. And the news was already out there. Mnuchin was obviously out and doing the news circuit here over the weekend. So it was already out, and that's why we're not getting that much of a pop. And again, I think this is because the deal is a little different than what everybody's expecting, and that's why you're seeing futures come down. The one area that we're seeing right now, some buying though, when you go out and look at the market right now and pre-market activity, the cubes right now trading up 70 basis points. They were up 1.5%. So even they have cut their gains in half. Large cap tech got into buying action early in the morning when I was looking at some of these large cap names, with the NASDAQ leading as we head into the most important week. I should just free flow this because I can do this without looking at the slide. Guys, we've got the largest week of earnings for the NASDAQ 100. You've got Amazon, you've got Google, you've got Apple. I mean, this is huge. Microsoft and Intel, they were appetizers last week. We're getting into a bit of the main course here, and it's going to be a 3-course meal because you got another week following that as well. So large cap tech right now, we've seen some pullbacks, people looking at opportunities. Amazon pulled back a little bit, got a nice upgrade from Telsey Advisory Group. If you're looking at retail stocks, Telsey Advisory Group's the one to watch on those upgrades. She is amazing. She runs an outstanding research outfit. Telsey upgrades their price on Amazon.com. We'll get in. I think that is actually one of the slides as well. Let's look at our chart. So 3,200 on the S&P 500, guys. That's what we talked about being the stopping point for stocks on Friday, and that's exactly what happened. 3,200 is also the top that we saw right in the beginning of June or early June. That's why you're seeing not only that, but a lot of zeros, a couple zeros after it. Believe me, as much and as simple as it seems, and it is simple, the more zeros behind a number, the more you can rely on it for support or resistance. Watch 3,200, 3,250, 3,200 here today. I think we're probably going to see us bounce a little bit around that. And 3,200 is going to be that level that you want to watch, because a break of that is going to take us down below to 3,100, which is where conveniently the 50-day moving average is on the S&P 500. Let's look at that chart just so you can hear it. The reason I'm telling you this is not because this is a go out and short the market with everything you got moment, but this is just giving you that sign that you should have those trailing stop losses in on some of those positions, especially companies that are out there getting ready to announce their earnings. You might see a little bit of selling pressure ahead. In some cases, I don't mind. Look at Microsoft and Intel. I don't mind sidestepping some of these earnings. Wow. Rebooting PCs here. Sorry, guys. So this is just one of those signs that, hey, you really do want to be a little cautious right now and understand that, yes, I've been talking about earnings risk and earnings seasonality, and normally we see the market top out. And if we don't get everybody knocking everything, cylinders hitting on all, then we're going to have an issue. Here's the other thing that you watch with that 3,200, 200-day moving average. I had people from my night trader system on Friday saying, where's the VIX trade? Where's the VIX trade? Where's the VIX trade? The VIX trade, we will have a volatility trade once again. I was watching so closely the 200-day moving average, which is right now at 28.20. That is that line in the sand right now. And if we bounce off this 25 or we pull that back below this 25, that's when it's going to be time to look at that volatility trade. And if you look at it, you can trade the VXX as an ETF if you're looking for a volatility trade, or you can trade with us in the night trader system where we're going to trade options, and we're actually going to get a call, maybe a call or two this time around on the VIX. So two different ways you can play that. You can obviously look at other different volatilities out there, but that's right now, checking the chart, that 200-day, and you've got the 50 right after it. If we break that, folks, it's off to 35 to 40. Very quickly for the VIX because it has got some pent-up activity. It's been waiting to run here. And there's your NASDAQ 100. I showed this to you last week for the first time just because we were challenging that 20-day moving average. We did indeed have a close below the 20-day. There is your second close since April. It was in June. Only two closes below the 20-day. This is the reason. And if you look at it, it makes some sense. Let's look at a few of these names here. Amazon. Amazon gets the nice upgrade today. What are they trading in pre-market? Amazon is trading right now. We're trading up about 2%. 20-day moving average. The pullback, look at how you've seen it, pull back to the 20-day moving average, and you're getting a bounce off of that, the trader's trend line. So that is why I was watching the cube so closely. Of course, you could look at Intel that broke through that slid through it, rather, I should say. And there was a reason. Obviously, they had a fundamental reason with that and the news. You guys need bigger bar charts, maybe? Or no, I think we're good on the bars. You saw it slice through everything out there. Microsoft, we saw some selling last week after the earnings. The quote I gave you that I picked up after reading, and you've got the 50-day in play on the Microsoft right now. If you look at it, Microsoft was exactly nailed in that they said that the expectations from this run-up in price were just too high. That's it. This is all about expectations right now. Nothing about the fundamentals because the fundamentals got taken off. So it's a confirmation. You got to do better than just sucking. But at the same time, you know what? Microsoft's going to come back. The 50-day looks like a nice trade. If I'm looking for long-term here, Microsoft at 200. They're the master of the subscriptions with Office now, and they're actually working to compete with Zoom, which is also looking to pull back to its 50-day. Watch for that 50-day at 220, 225. That's a tradable event. According to Zoom, last 4 times, not according to Zoom, but Zoom's charts, last 3 times we've touched that 50-day, you've gotten a bump in it. And if you think about it, the resurgence of the COVID-19 is going to push people more into that Zoomosphere. So I like this 50-day trade at 225. I'm writing down so that we can put in an alert and talk about that through the week. That's up on the yellow pad. Let's get back to the slides because I've got to make sure that we're done on time, and we're only in the 3. So the buyers are moving back into the NASDAQ 100. They're trading the heavy ahead of the heavy week of trading. First close, as I said, below the 20-month or day moving average. That's something to be concerned about unless we see a nice solid response. Microsoft and Intel watched. I mean, we saw those slice through their 20 days. Intel's below everything. Intel is in the isolation booth. They're giving orders to Taiwan Semi. That's why Taiwan Semi is blowing up this morning as well as an upgrade. They got an upgrade from Credit Suisse. So Taiwan Semi right now, when you look at Intel, they are in the isolation booth. You want to stay away from them for a trade for a little while here. They're clearly going into a little bit of get ready to weather the storm type of situation. Traders appear to be in the sell the news mode right now. You look at the Microsoft earnings, they were really good, but the expectations were still built into the price. So that's why we saw it trade down. Watch that as we head into this week's earnings announcement. When you see companies that are trading higher, and let's look at just a couple. Apple has been pulling back here. I love to see a pullback ahead of earnings because it tells me that people are actually selling the rumor at this point. Now it's up to Apple to come out and say, well, things weren't as bad. It is also the same situation that you saw as we saw with Amazon. Now it pulled back to its 20-day tradable event here, you could argue, and I would, but at the same time, we're gonna pop pretty hard this morning. Trading at what, 30.63 right now, according to my pre-market trading here. 30.63. If this thing pops back up to 3,200, I look at it from a perspective of you throw in, let's see if I can make these a little larger, and maybe that'll help with the blur, guys. I hope that does. Get back up to 3,200 in this situation where I think you could sawtooth your way back down again, 2,900. That'd be a good buying opportunity. Possibility, depending on how much we see in terms of rally between now and their earnings, that you want to have that stop loss in place on Amazon. Let's talk about some headlines outside of just stimulus and boring stuff like that. That's going to be general. Gold up 2% again. This is from the stimulus. So if you think about it, we announced the stimulus. We're going to be writing all kinds of checks again. And if you look at it from the perspective of the balance sheet, what's that mean? Well, weaker dollar, obviously, gold's going to go higher. 2% higher this morning. This is a trade that's going to remain a constant, steady burn higher through the end of the year. That's why one of those fast profit trades that I gave out more than a few weeks ago was shorting the dollar UDN. That's going to be another one that's going to be just a slow burn as the dollar continues to go down. EGO, though, another one of those fast profit picks, topping out at 12 bucks for the last week, trying to break through that. Now it's going to see that break. Cracks in the $12 price. Early last week, it looked like we were pulling back to $11.50. EGO's getting ready to run again. I like the stock very much. We could see a little bit of selling from that overbought, but overbought is going to become more overbought with the gold trade. Silver, the other side of that, 6% higher this morning. SLV, way overbought right now. Adding to it, when you take the 6% and add to that, we're going to see an ETF, a metal ETF, granted, but it's going to be trading at $22.50 this morning. $22.50. We have to see. Any Chris Tesla? I am here, Joe. But anyhow, I'll get back to me in just a second. Silver's going to see a pullback at some point, just even for a day or two. We've got to see a little bit of movement off of this high, and that's going to be the point to grab it. I like the silver trade if it pulls back with the SLV. I think it's a good foundation or something that should be in everybody's portfolio for the rest of the year. If you're looking to narrow it down, as I say with gold, when you look at gold, gold will give you the trend. And I'll be damned, that's pardon my French, but this is a heck of a trend, obviously. Going parabolic, expect it to level out a little bit here. But gold, Wheaton is the place where you'll find the trade in silver right now. Wheaton getting ready to go above $54, up 5% on Friday. This one is actually got the ability to stay parabolic a little more than the actual SLV shares do. Smaller company here. We're dealing with some volume coming in. There's some short interest on it. A lot of put activity on it a few weeks ago. People were trying to call a top when it was around 48 bucks. Broke through that, ripped through. Now you're getting the bulls coming, about the bears coming back into it. So watch Wheaton, precious metals. That is one of those trades that silver trend is giving you right now. Let's go into those headlines a little further. Taiwan Semi, and then I'm going to hit some of my favorite charts after this. We'll go into a little bit of free charts for some time here. Taiwan Semi upgraded to outperform from neutral at Credit Suisse. Stock $74 on Friday. This stock is going up. Now I've got it sitting at 7.8%. We'll see if it's reloading here right now. We're up 8.5%, 8.6%, $6.35, trading at $80. So above Friday's highs. You're going to see another large pop of volume here. And you are going to see a 20% move in 2 days is going to be offset by some selling. We'll absolutely have to see a little bit of selling, and you want to buy the dip on this one because Taiwan is getting the keys handed over to them by Intel, and they're obviously right now, they've been in a good position right now in the sector itself. Other ones out there, NVIDIA right now, if you look at the difference between NVIDIA and Taiwan Semi, and we can go to a chart of NVIDIA here, even though it's going to be a little blurry for you, I'm sorry. But we go to that NVIDIA chart as soon as it comes up, and you'll see that the stock has this nice 45-degree, it's bottom left to top right, I'll call it, riding that 20-day moving average. I think NVIDIA will still give you some leadership in the group. It's still best in breed when you look at what they're doing. Taiwan Semi right now is going to be the hot stock. It's also going to be up on the boards in Robinhood as it was last week. So this is going to be one of those when we talk about the Robinhood phenomenon. It's not as cheap as most people like. Most people on Robinhood like to grab the stocks that are $2 or $1, but in this particular case, they'll pay up to get the move. So other headlines that we're going to hit real quickly. Moderna. We got the interview this morning from the CEO. Phase 3 trials underway, 30,000 people. October and November is when we're going to start getting it. Moderna traded down to the 50-day moving average on Friday. I said at that point, I think it's a good buy. I still think this is a good buy. Moderna and AstraZeneca are the two that you're going to want to keep your eye on the entire way through this race. And this is going to be a race. Those are the two that we're going to watch and we're going to continue to see. AstraZeneca, we can pull up the AZN, pulled back after their announcement last week. You can see the pullback to the 20-day moving average. Right now, giving you a chance to buy in at 55.80. AZN is going to be, and AZN also had some headline news over the weekend as well, trading up 0.5% right now. So all the eyes are going to be on Moderna, but keep an eye on AstraZeneca. When you're building up that COVID portfolio, if you want to call it the vaccine stocks right now, I think you want to keep your eye on those two right now in terms of where the race is really going to lead us here. And they're giving you opportunities with these pullbacks. Remember, when we talked about AstraZeneca, when they made this move, one of the things I said is you're trailing stop. And I hate to sound like a broken record here. I do hate to sound like a broken record, but when you get those headline pops, when you get a pop of 15% on Moderna, and they happen, today's not going to be that big, but there'll be bigger ones to come, obviously. When you get those pops and you're holding it, trailing stop it, tighten your trailing stop up, and then figure out your limit price immediately. On AstraZeneca, my limit price was around $55, looking at it because that's where the 20 and the 50-day were riding. That's how you're going to play these stocks and do much better than pulling your hair out or what's left of your hair because you missed selling it at the top. Trailing stops at the tops and then set your limits. That's a rhyme. I didn't mean to do that, guys. Yes, AstraZeneca has had actually 3 other big deals that they've signed in the last month here. Nobody's paying attention to that they do other business simply because they're looking for the COVID-19 vaccine. At some point when we get back to normal, you'll see people start to worry about other drugs that are going through some the phase 3 trials. But right now, it's all going to be about whatever vaccine is going to help us probably a year down. Here's another one too. Tractor Supply Company initiated with an overweight at Barclays with a target of 155. Now, they just traded at 155 last week when they popped on the earnings. But this stock has been on a zero volatility rally. And the reason I bring this up is it is one of those that you can almost deem essential. I talked about it, I think 2 weeks ago, about how it's just almost enjoyable to go through the Tractor Supply and buy everything from things for my dog to things for the house. And that Tractor Supply is going to continue that course along with the outdoor stocks, Camping World. You can look at Winnebago right now. Winnebago giving you a good opportunity right now to take a look at the price as it's pulled back here. Here's Winnebago chart. Demand is going, and there was a report I read over the weekend. Demand is still going through the roof for RVs. And this is because people see this second wave coming right now. They're going to spend more and more time outside. You got a little bit of a squeeze play with the 50 and the 20-day going on right here, but this isn't a squeeze play that's going to stop the stock. Right now, looking at $60, if we touch down on that 60, that's going to give us good support. But right now, Winnebago, you look at it with the possibility just to trade back up to those highs at 72, and the stock looks attractive, and it is in that same world as our favorite to talk about here, Camping World Holdings. Pulled back on Friday, almost hit that $34 level. I think if you pull, we may see a little more selling because this stock is rich, let's say, in terms of the run-up that we've seen. It is not a very cheap stock under at least the circumstances. But at the same time, you have to look at it. And when the company comes out and releases their earnings, and it's unconfirmed right now, but August 6th, you're going to see them come into the earnings confessional, and I think you're going to have a good report from Camping World Holdings, and that is also going to reflect through to companies like Thor, which is another one that is out there. Hasn't been doing as well because, quite frankly, they are not, Winnebago or Camping World. And then you get Forest River, who's owned by Berkshire Hathaway. That's who made my particular camper. So you've got Forest River, you got to buy Berkshire Hathaway, and you're going to own a bunch of other stuff. But right now, these are the industries that are actually, thriving in this COVID-19. No, not Eli. No bounce up sideways for a month. Callaway Golf. I made a joke about how I lost a bunch of balls last weekend. We're still trading up. Look at the 20-day coming into support, the 200-day. Callaway is still Callaway and Dick's Sporting Goods, and Dick's is giving you a little bit of a pullback, just a little bit we saw on Thursday, and it's getting ready to make this move through that 46 level. This is going to get things exciting when Dick starts to make that move. So the outdoor stock's still alive and well. Let me get back to that Tractor Supply. 145 is where it's trading. This is a slow burn stock. If you don't want to buy it for 145, you can look at the out of the money, the 155 Jan 2021 calls on it. Use a stock substitute plan with it, or go out and write a spread. If you'd like to do a 155 160, you could do a 155 60 spread on it. Trading out maybe till September. October is when you're going to see some of these names start to ebb off a little bit. But Tractor Supply right now, nice one that needs to be added. Garmin, the last of the headlines we're going to get to, major outage, and they're saying it's ransomware that could be to blame. Stocks trading down a couple percent in pre-market trading. I'm not suggesting a trade on Garmin here, because this will be a pretty quick recovery for Garmin. Maybe they bounce down to 95. Maybe they come down to 93 where the 50-day is. But this just reignites or refocuses everybody's attention on companies like Cloudflare. Cloudflare traded down to 35 on Friday. The stock has been trading all over like a BB in a boxcar. One of my favorite sayings, and somebody else out there likes that saying as well. This thing has been going all over the place after making its run in July. They have confirmed their earnings report for August 6th. This is going to be a pretty good report, I think, because we've seen so many people that have been going off-site, working from home, remote working. Security has become number one in terms of this. And Cloudflare is right there with the security. We're getting some analyst upgrades on the stock ahead of the earnings. Even on this pullback, we've seen some earnings. some upgrades. I like Cloudflare, $35 right now. No short interest to really speak of. The short interest ratio the short interest to the float on Cloudflare, believe it or not, is actually large, which means they've just got a smaller float. It's 8%. So 8% of the float is tied up in short interest. Right now, it's 9 million shares, so it's not that much. Short interest ratio of 1.7. But that will get you these volatile moves to the upside if they have a great earnings or even a good earnings right now. So take a look at Cloudflare, $35 with a target of $45 here over the next month following that earnings. And we have talked about Crown, CCI. Crown is actually one of those industrial names, CCI, that came out. I mentioned this quite a bit, actually, in this full disclosure. I have a position in Crown. It is leveled off at its 50-day moving average. This thing moves all over the place. When you get your spikes, you get them and they come right back down again. It will drive you crazy if you're doing a stop loss strategy, because you want to see a faster move down to get into that position. Usually I'm using the 50-day moving average, but things have been improving for Crown right now. The banks right now, when I look at the banks, and this is going to be, we're entering into a little more, and I feel like I'm saying it every week, and maybe I am, but we're entering a little more into that ground for the banks where they're going to have to hold their own. They're down 25 basis points right now, 0.25% this morning in pre-market trading. The XLF got a little bit of a sideways activity from the earnings that we got from Morgan Stanley. And if you look at Morgan, we've seen these names start to pull back again. Morgan Stanley coming down to its 20-day. I say give it a little weight at the 20-day moving average right now, people. $50 combined with the 20-day, it's going to get you some buying interest, maybe up to $52. So you get a 4% move there. But I think you're eventually going to see Morgan Stanley even test its 50-day moving average. Goldman Sachs, we switched the first letter here on those. Goldman Sachs going down below the 50-day moving average. I'm going to run through a bunch of them. Citigroup right now. Look at it trading right at its 20 and its 50-day right now. Obviously, we can look at Wells, and Wells is actually last week started to pop to life. Wells, for those of you that haven't seen, made the top 100 list for Robinhood last week. So the Robinhooders are jumping on Wells right now and thinking that this is going to move higher. Stock's trading at 26.29. Give it maybe a little bit of room above the 50-day moving average, but you know the story on Wells better than probably most of the people that are having their Robinhood snack and going out and buying it. It's still a big fundamental story. We've got the regionals also, which we've got a couple positions in right now. The KRE starting to top out. We saw some weakness on it on Friday. When you look at some of the names out there, PNC, obviously one of the names that did well, started to roll higher. Fifth Third announced their earnings last week. They got a pop and then started to pull back down again. Today they're going to get that 50-day resistance yet again. And let me look at something. Fifth Third trading down 0.25% right now, pre-market on it. So you're getting the weakness in the regionals that is going to be a bit more of a follow through, I think, after we finally got through that earnings. A few others that also popping up high on the list here. Let me Biogen, BIIB, another upgrade for Biogen. And you'll see the biotechs. Biogen has been trying to get itself out of the cellar here. If you look at that against the XBI, XBI is another one of those sectors that's been pulling back and giving you a little bit of opportunity. Short interest actually went down on the XBI as a whole in Friday's short interest report. So it's interesting. We're seeing a little capitulation out of the biotech sector. That could tell you that we're starting to lose a little bit of this wall of worry that the XBI has been climbing up here. Watch it at the 50-day, folks. The 50-day should give support. And obviously, when you talk about the XBI, everybody thinks the first thing they think about is they start to think about whether or not the sector itself is going to benefit from a vaccine or some sort of therapeutic for COVID-19. You have to remember, there are more than 80 companies in this sector. 80. Lots of them with phase 2, lots of them with phase 3. That's why short interest remains high usually in the XBI. Right now, you're falling into a place where a lot of people are just associating biotech companies and the biotech index with COVID-19. So they're putting a complete blanket over it and saying, well, when this happens, it's going to be good news for the XBI. The XBI has been a fantastic hold. I call these foundational holds. You've got ETFs like, let's say, the XBI. Let's also say the dollar, the short dollar, TLT, semiconductors with the XSD, QQQ. You've got these that make up a portion of your portfolio, your larger portfolio. And then you have stocks that give you your alpha, your true alpha. When you're doing this, you watch when an XBI starts to fall a little bit out of favor. That sentiment starts to get a little bit bubbly, and you start to see it drag on. XBI was one of the worst sectors to hold in 2008, 2009. It was one of the worst for the same reason. It's one of those situations where they didn't have as much coming through the pipeline as everybody had priced in, and then the market went into the tank, so they went down further. So just something to watch closely. I'm not saying the market's going in the tank right now. I do think we need a nice little correction. A healthy 10% or a healthy 20% would put us in a little bit of a better reset and put a lot more deals out there. Probably be able to get a little handle on some of these gold stocks and some of these tech stocks, but the opportunities are still there. The XBI target right now, target on the downside, I say you watch 108 right now. 108's got to be just because of that 50-day. Watch for a buy at 108. You saw the technical traders. So let me go back to the chart here very quickly for you. You saw the technical traders kind of come in and try to hold it up at the 20-day moving average when we were seeing some weakness in July. Broke through that on Friday. There was some support on Wednesday, but this is starting to turn into a little more of a momentum when you get 4 days down like this. Kind of similar to what we had been trying to see or had been possibly seeing with the NASDAQ 100, where you start to get some momentum down through there. We'll get a little bit of a pop today, but again, watch how the day trades throughout the entire day. I think people are going to start to get nervous a little bit about the earnings coming up, because everybody is still thinking about Microsoft and Intel and what went wrong there. Intel, it was poignantly clear. Microsoft, it wasn't. It was just expectations. People are going to worry about that a little bit if you see some strong rallies in Amazon, Google, Apple, and a few others over the next couple of days. Wednesday, Thursday, the big days for reporting there. I am actually going to cover on Wednesday when I'll be with you next. And this is, I put it in there somewhere. I am actually going to be covering 3 of the big cap earnings that I think you need to be watching here. So I'm going to actually give you some trades on those, and they may not be all the large cap, because the large cap tech game, they can be sexy, they can be fun, but I'm going to pull out 3 earnings trades that are going to be they'll be Thursday and maybe some Friday morning trades that we'll cover on Wednesday during our session at 8:45. So make sure you tune in for that. When we look at the rest of the week, or actually the rest of the day, watch the activity, and we're going to see some headlines about, obviously, the fiscal stimulus. That's going to be a drip all day long. I'm not going to be surprised if we see Larry Kudlow on CNBC at some point. Won't be surprised if we see Mnuchin a couple of times. You're going to hear the House Democrats weigh in on this as well. The liability, the waiver of liability, et cetera, is something they didn't want to see. So watch the headlines on that today. I think that's going to push the market around. Other than that, it's going to be a situation where everybody's going to be keeping an eye on the companies, those large ones that are reporting. Apple, Microsoft. Let's take a look at the big. This will be the last thing we'll cover. We'll look at Apple, Microsoft, and we'll look at Amazon. Hold on a second. There we go. I've got to get my mouse over there for you. Let's look at the Amazon, since that's obviously the big daddy of the big daddy here, that we're going to see report. This is the one everybody's going to keep their eye on. It's all going to be about AWS, but it's also going to be about what they did during the COVID-19. Stock's hitting at $20 right now. I think it's a trade up to 3,300. If it gets there, and it could, you could see it pop there in 2 days. Apple's done that before. If it got to 3,300, I've got a tight stop loss in ahead of that earnings report, and waiting to see for the pullback, because you will get to sell the news. You would see anything from here as buy the rumor. A pullback to the 50-day, if we did see it for some reason on Amazon before their earnings, is a definite buying opportunity. Apple, another one that is going to be big. This one is going to be a little diluted. They're talking about when they're going to announce the new phone, what kind of phone. There's a lot more questions around the phone this time than there were over the last couple of pre-phone, let's call them, earnings seasons, which is what you've got in July, because they release in October. I'd watch Apple with the 50-day right now, because I'm not completely convinced that we're going to see 350 hold. And any type of miss here is going to take Apple probably down to that 300, maybe even 320, somewhere around that level. Notice you've got the 200-day moving average, and it's not going to be a one-day move. It's going to take a little while for it to happen. But Apple has not been the stock that Amazon has been. So a little more pressure on Apple right now to actually prove. Let's look at Alphabet. Alphabet coming up as well. This is going to be all about advertising revenue, obviously. Alphabet has been doing a great job. Their services are coming up as well. So look at Alphabet right now. I don't think it breaks above 1600 before or after the earnings. I think it's set up for a little bit of a sell the news here. Come down to the 20-day again after the earnings, or maybe even the 50-day, and that's a nice buy. Look at all those semiconductor companies. Keep an eye on those right now. Taiwan Semi, obviously, is one of the big ones that we want to watch. You can continue to watch Intel, NVIDIA, AMD, all of these. The whole group right now, it as a whole, is starting to see a shift. And the shift is going towards AMD, Taiwan Semi, Intel. NVIDIA is not going to go away. They're going to be the big horse, the big dog in the game. But some of these smaller ones, and AMD is by no sense a small one, are really going to do well here, I think, over the next 6 months. Watch them, though, as they're completely overbought. I mean, you really are seeing just so much pressure on them. AMD getting that boost, obviously, because of Intel not going forward with their 7 nanometer chip development here. So the pressure is going to be on AMD, and boy, Apple really made the right move by getting away from Intel for their chips. I guess that is one of those where Tim Cook certainly played it well. Anyhow, we got to close it up. You got 2 minutes till the market opens. I'll be back with you Wednesday. We'll have 3 earnings trades for you then. We'll go through some headlines. Let me know if you like the way we did the trading the headlines today. I like Tractor Supply. Like looking at the Camping World, the Winnebago, some really good stocks out there that you can pick up right now. I think looking at silver and gold, give them a little bit of room to pull back before you start jumping into that trade. That has been a hot hand here. Silver actually was also on Robinhood's top 100 last week, and it climbed very quickly. So a lot of people jumping into that silver trade. Maybe it needs a little bit of a rest. You can buy it, but then dollar cost average into it as it pulls lower. That's another way you can go about doing it and not miss out on some of the run right now. With that, I'm going to wish everybody a great day. I'll look forward to seeing my night trader people at 11 o'clock as usual. And I will see you Wednesday. DR will be with you tomorrow, and you'll certainly be in his good hands, and he'll guide you well through tomorrow's market activity. I hope you have a great day. Always wish you the best trading success. Bye-bye.